Welcome back everybody to the Nomad Hedge. In today's video, it's all about the US dollar. We're also going to be taking a look at yields and bonds for that matter. If you haven't already, consider liking and subscribing, and let's get into the video. So the reason why this matters is because I believe we've hit some critical levels here for the dollar, and that also translates to where yields could be going as well as bonds. So let's start off here by taking a look at the US dollar here from a larger and big picture in a monthly chart. And if we expand this one, you can see here that the dollar is currently trading right above this POC line, which is this red line here. And the reason why this matters is because every time we're above the POC line, it tells us that the bulls are in control, they're in charge. And it amplifies that reasoning by taking a look at the long-term trend as well, right? We're also above the 233 EMA on a monthly chart. And we're also above this long-term trend line here. But it looks as if we're likely going to break this one. Because if we do, there's the potential here that we could reach this 100% extension as well as the 0.618 retracement. And that would then correct this entire move here from 2008, in which the US dollar has been in a bull market. But I could also make the case that the dollar has bottomed here as well. If we take a look at the dollar here on a daily chart, we can see here a bounce right at this POC line. But what's important to understand about this prior downside move here is that we could be looking at an impulse here, meaning that the recent upside move could have just been corrective. So if this in fact is a correction from this upside move here and the bounce from this POC line, we could anticipate that the dollar could do something along the line of this, where you have an A, right? And then you have a B, and then you have a C, okay? Now, if the dollar would be rejected at this level, that would be insanely bullish for the markets, okay? But what happens later, we'll take that for another video. But for now, I think the dollar has reached a critical level, and we're also going to be taking a look at the 10-year yield and see what it matters as well, because I think these two have been moving in tandem recently, almost in parallel. And so they could tell us a lot what's going to happen in the markets in the short term, right? So anything below here, anything that would indicate that the dollar goes down, that would be bullish for the markets. Okay, and that's what we talked about in our previous video, that we are in this wave 5 extension, most likely. Okay, so this is how we view the US dollar. And in fact, if we were to bottom here, so let's just say that this wasn't an impulsive move here from this downside move, then we could anticipate that the dollar has in fact bottomed here, and we could be looking at a 1-2 base here, and that we've also almost bottomed here at the 100% extension, which is very close to that trend line here where we found support more recently. But anyways, we're going to take a look at the 10-year yield here, and we're looking at this thing on a monthly chart, and we can see that the 10-year has found support multiple times here at this trend line. And that means that the dollar could either bounce from this level, or we could see a massive break here. And that would indicate that this entire move here is likely to end, and that we're also in that late or last stages here where the final correction is about to ensue. Now, if we take a look at the 10-year yield here on a daily chart, we can see here that it's squeezing almost between the 233 EMA on a daily, and you got the 55 EMA as well as the 221 EMA at the bottom here. So the market is basically waiting for a catalyst to happen, and it would just tell us whether the yield's going to rise from current levels, or we're going to see a break of this trend line. And so I've mapped out some auctions here, and it just depends what the market will do at this point. So we looked at the dollar, where we said that the prior downside move could have been impulsive. That means that we're anticipating that the dollar could be making a downside move, and that, for that matter, the 10-year yield could also move down lower, and it would knock down these auctions along the way. Now, if we were to go higher and the POC line, we could anticipate a move here where we see a knockout here of these auctions. So what does the market tell us for now? What do we favor? What do we think is going to happen? Well, for that, we have to take a look at bonds. So let's take a look at the TLT here. Now, the TLT has been in a massive drawdown. Okay, you can see that we've been in a bear market for bonds, but TLT has also been in a consolidation phase right at this level, and we think that it's bottomed here right at the 80 level, and that we could see a massive rally here for bonds. Now, what would happen if bonds start to rally? You would see the 10-year yield follow through towards the downside, and we could likely see the dollar also breaking down as well. Now, there are two levels here for the US dollar. We're looking at the DXY futures again. Either we're going to move down to this 100% extension, or we could look towards this 0.618, which would indicate a dollar at around 87 before bottoming, starting a new 1-2, and that would also coincide with this value area lows from this volume profile. So I think it would be very wise here to gauge the direction of the US dollar. And as I said before, this 0.618, keep an eye on this level here at around 98, 99. If we're starting to break above this thing, look for a breakout here above the 233 EMA. And if that were to happen, we could look at the 10-year yield moving higher, and we could continue to see a sell-off for TLT and bonds across the board. However, if we're getting a rejection here for the US dollar, we could see another last move here for the dollar. And if we take a look at this thing on a long-term chart, the monthly chart, we could either anticipate a move all the way down to around 87. So what does this mean when we factor in the broader mark of the S&P 500? Well, if the dollar goes down and yields goes down, one can say that the stock market becomes the better choice to park your money. So that would favor the US stock market. Now, if the other scenario were to happen where the dollar actually finds support here and breaks out to new highs, breaking above that 0.618 retracement we talked about earlier, well, then that could be your sell signal, because now there's an attractive alternative to the stock market, which is obviously the bond market. So that's basically what I wanted to share with you in this video. Keep an eye on the dollar here. Just pull this one up on a chart. Just watch this level here around 99. We don't want to break above basically 100. And if you're starting to see a break below 98, 97, that could be your indication that the stock market is likely going higher from here. So I hope you're enjoying this video. You can follow me on X if you haven't already. Consider liking and subscribing, and I'll see you guys in the next video. Take care for now.